Get ready because the institutional money is coming into crypto. We're going to talk about that in this entire video. Hello everybody, my name is Zach. If it's your first time dropping in, I know you're going to get some value out of this video if you like crypto because things are shaping up to be a great last quarter of 2021 and setting up to be a great first quarter of 2022. We're going to talk about this Forbes article that's titled Institutional Money is Pouring into the Crypto Market and It's Only Going to Grow. This article written back on August the 12th. So what is this foreshadowing for the next 4 months? Also, we're going to talk about an interview that I did last night with a good friend of mine. We're actually going to start there and then come back to this article. So this is a good friend of mine, Todd Finn, who I had on the channel last night. He's actually starting his own crypto channel. You can find him if you just search Finance with Finn. He has not yet posted any content, but it's right there. You can see, you can look for his picture, Finance with Finn. He will be posting very soon, and he's a brilliant mind. I asked him what he foresees in the stock market and how that can impact crypto this last quarter into 2022, and here is what he had to say. Listen in. This is interesting.
Yeah, that's a great question. I think it goes to what we were talking about earlier with, are these cryptos going to behave like risk-on assets, or are they going to behave like risk-off assets?
Right.
Because, you know, it's my opinion that the stock market will run into some headwinds in the early part of next year, even if the late part of this year. I'm not talking crash necessarily, but you know the comparables are going to be difficult. They're going to be trying to compare themselves to this year when they were, you know, we were coming off of absolute bottoms. Those comparables are going to be difficult. So as the stock market gets turbulent, do people look to cryptos as an alternative for stability?
What do you think? When the stock market gets turbulent, do you think people are going to turn their attention to crypto? What kind of impact will a turbulent stock market have on the crypto space? I want to hear your thoughts down below in the comment section. Personally, I think it could be great for crypto. Institutional money is already coming in. If the market gets worse in quarter number 4 and into quarter number 1, more money, in my opinion, could be piling in. And I think that's exactly what's going to happen. Listen more to Todd here.
Or are the cryptos going to be behaving similarly to stocks, where when the stock market gets jousted, are they going to get jousted too? I think it's really difficult to know that, again, because we've not been able to observe a lot of these coins through a full cycle. Now, we've been able to observe Bitcoin through a full cycle.
Right.
And in this, you know, if I go back to 2018, the crash of, 2018, right around Christmas time, New Year's Eve, from Christmas Eve to New Year's Eve, the market was down 20%, and Bitcoin was, I think, up like 5 or 6. So, if I remember right, I mean, but it behaved like a risk-off asset. It behaved like a treasury bond, where people dump money there and hid from the stock market.
And BD, we're going right to you next here on the Super Chat. I see it. Could you make that same point? Like, is something inflationary or deflationary? Are you saying similar things, or is that slightly different?
No, it's a slightly different thing, but it's a very good point.
Okay.
In that, is the Fed?
Okay, so that is the big question. Will we see big money come into crypto? That's the question that a lot of people want answered, and it's going to be interesting to watch. Now, we're going to bounce over to this article real quick. We'll come back to Todd here in just a second. Institutional money is pouring into the crypto market, and it's only going to grow. In its formative years, Bitcoin was dismissed, completely dismissed by institutions as a showy, worthless digital asset favored by criminals. Well, now, smart money is allocating to Bitcoin, just as he explained, as a portfolio diversification strategy. These days, family offices, hedge funds, traditional money managers have a very different perspective on cryptocurrency, right? Completely different shift in how they look at Bitcoin, how they look at the entire crypto market. With an eye-watering $17 billion worth now of institutional capital flooding into the space in 2021 alone. I think this is setting up for the biggest year yet in crypto, which will be 2022. Now, a recent study conducted by Fidelity Digital Assets Fund found that 7 in 10 institutional investors, 70%, expect to buy or invest in crypto assets in the near future. More than half of the 1,100 people surveyed between December and April revealed that they already own such investments. More than half. A separate survey by Nickel Digital Asset Management came to a similar conclusion, showing that 82% of respondents expecting to increase their crypto allocation in the next 2 years. Just over a third of respondents said the involvement of more leading corporates and fund managers has given them greater confidence to invest in cryptocurrencies. How about BlackRock? They are leading the way. The world's largest asset manager with $9.5 trillion worth of assets under management is one of 16 mutual fund managers, including Morgan Stanley, to gain exposure to the crypto market via its global allocation and strategic income opportunities funds, which has a collective worth of over $40 billion. BlackRock is also indirectly exposed to Bitcoin via the 14.56% stake in MicroStrategy, the cloud software firm with over $3.4 billion of BTC on its balance sheet. Michael Saylor, CEO of MicroStrategy, has been one of Bitcoin's biggest bulls and biggest champions in recent years, arguing that it will soon be on the balance sheets of cities, states, governments, companies, small and big investors, as well as huge tech giants like Apple, Amazon, and Facebook. You name it, people are going to have Bitcoin on their balance sheets. If and when this happens, Bitcoin will, of course, skyrocket. Now I'm going to come down here. Grayscale's Bitcoin Trust, another great example, allows investors to speculate on Bitcoin without needing to buy it directly, right? If you just want to dip your toes in, something we talked about with Todd last night on the live stream, if you just want to dip your toes in, you could do that. You could go for the Grayscale Trust. The fund is currently valued at well over $20 billion. The asset manager has additional index funds dedicated to several altcoins such as Filecoin, Basic Attention Token, and Chainlink. Interesting. I didn't know those three were that in that category. Now, one last thing, and we're going to go back over to the interview. If the long-touted physically backed Bitcoin ETF, that's the big one, right, finally gets the regulatory green light in the United States, this could go a huge, huge way to offering retail clients access to the performance of Bitcoin in a safe, secure, and in some instances, risk-adjusted manner. That's something we were talking about Todd with last night. And overcome issues the regulator raises that are currently barriers to mass retail access to an adoption of cryptocurrency. That, to me, could be right around the corner. The same general impact on crypto adoption as back then.
Yeah, that's actually a very interesting question. So the first part of it in the mortgage market, the one thing that was different in 08, 09, I don't want to say that history can't repeat itself. It normally rhymes. Usually the tune is slightly different. And the one thing I think that's different at this point is banks are infinitely better capitalized than they were in 2008, 2009, mostly because of regulation and the cash that they have on hand. Frankly, if there is a problem in banking today, it's that there is too much cash. They have far too many deposits. Mm-hmm. I'm going to do a video eventually, and hopefully maybe I can do a follow-up on here about why that is really bad for just the average Joe. I mean, the way the money velocity and why that's hurting people. But on respect to this question, it concerns me to an extent. I think that there's enough dynamics behind the housing market right now that are demographic. You know, you've got a boomer generation who just doesn't want to leave their houses and a millennial generation that's in dire need for houses. There's just not, frankly, enough stock out there. And, and we can't produce them fast enough because the raw materials aren't available and the cost of them are too high. So I think that while the housing market will go very much like the economy, meaning that, look, I'm going to make my mortgage payment until I get fired. And then, then I'm not going to be able to make it anymore. So provided that the economy stays strong.
So we were talking about the overall situation we find ourselves in the world right now from an economic standpoint as that relates to crypto. If you want to watch that entire conversation, head over to the channel. You'll find that link over there, Crypto Live. Just did it last night. You'll see Todd and I's face on there, and it says $330 million investing, because that's what Todd manages as a portfolio manager. In fact, I'll just head over to the channel real quick, and I'll show you exactly which video I mean right here. You can't see that because I'm blocking it. Right here, 330 million right here, portfolio manager. That's the live stream from last night. Go check out the full video if it's something that interests you. But here's the key takeaway. Institutional money is coming into crypto in 2021. Now the question is the roof going to blow off in 2022 when big money comes pouring in? I think it's going to happen. Let me know your thoughts down below in the comment section, and I'll see you in the next video.